very strong pickup in revenues. So the company had done fairly well in over the last, I would say, 6-7 years in terms of investing through the downturn, investing in stores, investing in in the brand, building the brand image and stuff like that. But I think somewhere down the road, the delivery option on your mobile, which is kind of expanded with Swiggy and a whole lot of other players coming to the fore, giving consumers the option to order food from various restaurants. That would have probably contributed to the kind of lack of revenue growth we've seen in this particular company. So I don't know how they're going to get out of this situation. I think the number that came through yesterday of 7.5% decline in SSG growth is a fairly shocking number. At 9, I think 9 rupees was the EPS they declared for FY17. I don't think one should be expecting any kind of phenomenal growth to come through over the next few years from this company. Even if there is a kind of a turnaround, I seriously doubt whether we could probably see more than a 25% kind of growth come through on the earnings front. So to that extent, I would think that the stock is definitely overpriced where it is right now. Probably should be heading lower. And the caveat here is we don't cover the stock as things stand currently.
Okay, that's the take on Jubilant. Horrible numbers coming in there. But Aurobindo Pharma, let's cut across to the management con call and hear out what they have to say about their Q4 performance.
11 filed and approved. Oronex 4 filed and 1 approved. Unit 10, 4 filed, and UGR 2 products have been filed so far. Unit 3, 7, Unit 7 and Oralife manufactures oral non-beta-lactam products. Unit 4 manufactures general injectables.
Your line coming disturbance. The disturbance.
Yeah. Is it okay now?
Yeah, now it's fine.
Unit 4 manufactures general injectables and ophthalmic products. Unit 6 and 12 manufactures cephalosporin and semi-synthetic penicillin respectively. UGR manufactures oncology and hormonal products, and Oronex, which has its facility in Bhiwadi in Rajasthan, manufactures penem injectable products. Europe formulation sales for FY17 were at 3,277 crores, an increase of 5% year-on-year. For the fourth quarter, the business registered a decline of 8% year-on-year to 772 crores, largely due to base currency depreciation, and it is flat at base currency. The acquired actives business continued to see profitability during the year. During the quarter, Unit 15, the dedicated manufacturing facility for European markets, has been commissioned. Emerging markets formulation sales for the...
Okay, Girish, is the disruption in pharma temporary, or just like IT, where with the sector which has seen both, disruption both in terms of delivery and also in terms of demand, we could see a similar kind of a cycle now playing out for Indian generic companies?
See, in terms of earnings impact on the companies in the pharma sector, I think the destruction has been far greater than one has seen in the IT services firms, because we've not seen the kind of earnings declines, what Dr. Reddy has kind of seen over the last couple of years in any of the tier 1 IT companies. So to that extent, I would probably think the IT services model is probably a steadier model as things stand currently. But in terms of what we expect is that we think this phase is probably transitory. We think that the earnings that one is seeing right now is probably not the normalized earnings for some of these companies. A lot of these companies have got extremely strong drug pipelines in the US. There are a lot of ANDAs which have been filed, which have not been cleared by FDA at this point in time. And we think that the revenue potential for a lot of these companies in the US is fairly strong over the next 2 to 3 year time frame. Yes, I think currently the generic companies are facing pricing pressure, they're facing regulatory pressure from the FDA side. But my analyst believes that the regulatory pressure is probably transitory in nature. Probably it's a 12-month and 18-month kind of a time frame within which we believe that the Indian companies are kind of rise up to the occasion and kind of clean up their act and move forward. So we expect earnings to kind of bounce back to a fairly strong number. So for instance, Dr. Reddy's, we are expecting bounce back in earnings to the extent of almost 2.5 times from where they were in FY17. But I think you need to have a very strong stomach to invest in the pharma sector right now. I think you're going to see a fair bit of volatility over the next 12 to 18 month time frame. I think a lot of news flow is going to buffet the sector and stocks up and down. So if you have a 2 to 3 year time horizon, I think probably this could be the right time to enter pharmaceutical sector. So that's the way I would probably approach the pharma side right now.
Yeah, indeed. And pharma brings me to Sun Pharmaceuticals and the kind of reaction that the stock saw post its earnings. CK, do you sense that we could see some more weakness in the stock after that massive gash yesterday of 11-12%?
We treated collectively, and there is a collective view being taken on most names, and it's very difficult for any stock to go against the grain. So if the pack, which we saw some short covering actually coming into the market towards the later part of this session yesterday. So now we have to see whatever results come out today and whatever happens now in the context of what happened to pharma stocks yesterday. I presume that you are asking me about pharma, or was it specific about some other stock?
CK in particular, Sun Pharmaceuticals.
Yeah, so Sun Pharma shouldn't be any different from what you saw with respect to the others. So particular to Sun Pharma, I think it's hit down to what, something like 58% erosion from the high prices. So people will continue to seek value in all these names, and they will try to punt. And those punts, when they are actually timed right with some sort of market cycles, will give a brief rally upwards. So Sun Pharma need not be an exception. I think a substantial amount of the market response happened yesterday. So if the overall pharma pack today is not weak, then you might see some short covering emerge in Sun Pharma as well. I think evidence of that was already there towards the closing session of yesterday. So right now, not really looking for further declines or things to turn much worse from the current levels, but rallies will all remain pretty muted.
Yeah, Sun Pharmaceuticals was definitely one such case in point. The other entire cluster was, of course, the ADAG group of names as well. What with the loan default news around Reliance Communications, and that really rubbed off on the rest of the pack as well. So be it a Reliance Power, Reliance Infra, Reliance Capital, the entire cluster of stocks saw some massive wealth erosion in just one single trading session.
It's a spiral effect which happens. I mean, that Reliance RCom is a bad business. Operationally, there's nothing going on for them. In terms of the debt overhang still exists. The tower deal, it has not seen light of the day despite multiple conversations, despite numerous back and forth conversations with some PE investors as well. Now, the comment from the management yesterday clearly is indicating that they will not default on the debt obligations. But markets fear that if there is a debt default in RCom, could that have impact on other businesses? Other businesses may be independent and they have different cash flows and different business dynamics. But if a group company is defaulting, we've always seen that it really could have a spiral effect on the other group companies as well. Also in the past, question marks were raised about how there was an intercompany lending between various ADA group companies. Now markets are weak. And typically when, some of the high beta stocks, the ADA group stocks, they are very high beta in nature, very large and very liquid, and they really tend to crack and they tend to really, get impacted the first. But the news for RCom per se is bad. The business is in stress. They are struggling with cash flows. And if at all they go on to default on their debt obligation, that's going to be bad news for the image of ADA group. Girish, what's your take on what's going on with RCom per se and ADA group stocks?
We don't cover any of the ADG group stocks, but I think the current environment is very good for raising capital for decent quality businesses, and I think probably the ADG group should look at situations where it should be raising equity in some of the other companies, so to speak. So there is a lot of money flowing in both from the FII side as well as from the DII side, and we now have a situation where quality stocks and even low quality stocks are kind of trading at fairly good multiples. So I think it's an environment which is good for de-stressing balance sheets, so to speak, by raising equity from the market. So I think probably this could be the environment which is probably suited for deleveraging some of the companies that some of the stress groups have right now. So I can't specifically talk about the ADJ group.
Okay, fair point. That's going to be an interesting story to track today, whether or not you continue to see weakness, irrespective of the fact that the management last evening, post-market hours, did allay some of the fears, saying that they're not going to default on the loan payments at all. But 8:45, let's get in some more trading ideas. CK, what's the positional trade for the day?
I'm looking at Colgate-Palmolive and finding that on the weekly chart there's a very attractive price pattern which suggests further gains ahead. FMCG as a pack has been thriving in the market with most of the leaders up and about, and Colgate is as yet moving laterally. And the pattern there suggests that this will be a move of a longer lasting dimension. So this has to be a positional play and not looking at it across the next 1 or 2 days. At the current price of about 1015 to 1020 range, I think it's pretty low risk. One could maintain a stop loss near 1000 rupees and look for substantially higher prices once a breakout happens.
Right. Kunal, what about your 8:45 idea?
Nico, it's a pharma name and I'm suggesting to buy Cipla at current levels. Now, day before yesterday, the stock formed an what we call as a rare sort of an inverted hammer pattern. Yesterday was a good day where you saw the price managing to engulf and cross the day before yesterday's high and just about close very close to that 505 odd mark. I believe that the day before yesterday's candlestick pattern and yesterday, I think both of them suggest in conjunction that the stock could see a short-term reversal on the upside. Hence suggesting a buy at current levels with a target of 530 at least. Keep a stop loss of 492.
Manas, what's on your list?
That is a sell on Torrent Power because stock is making lower tops and lower bottoms. Few days back, stock broke its 200-day moving average, and yesterday it reached its support of 188 also. I think this weak trend will continue, and Torrent Power can test 172 soon. So here one can go short with a stop loss of 193.
Siddharth Bambre?
Short Just Dial. Now this counter we have been searching to short since 490, 500 odd levels. Fresh developments that further addition of open interest was visible in last trading session. Rollovers are pretty okay, but then if you look at what is happening in OIs, most of the time stock is seeing fresh formation of short positions. Volumes compared to last 1.5 to 2 months have been fairly high, suggesting that even this high beta name can substantially move down from current levels. It's about to breach its 200 DMA. I'm anticipating that the fall can be quite steep, but I'm expecting it to first move towards 405, 400 odd levels. Fix the stop loss of 478 and go short in Just Dial.
Okay, let's quickly recap then the trading ideas coming in today, and here's what CK has been recommending. He's got a buy on Power Grid with a target of 214. He's also got a buy on M&M with a target price of 1365. Manas Jaiswal recommends selling BOB with a target of 165 and a buy on HDFC Bank with a target of 1650. Also a sell in Torrent Power with a target of 172. Kunal Bothra recommends selling Indiabulls Real Estate with a target of 140 and a buy on Shriram Transport target 1035. Also a buy on Cipla with a target of 530. Siddharth Bhamre recommends buying M&M, which he says is a low risk idea, and a buy on Wipro, which is a moderate risk strategy.
Devin Joksi also joins us, represents Scared Joksi Securities. Devin, good morning. Thank you for joining us. BHEL and L&T, how would you rate those numbers? I mean, FY18 guidance from L&T is not rosy at all. I wonder why markets are excited about owning L&T.
Yeah, Nikon, good morning. Well, I think the L&T came out with a decent set of numbers. I don't know, I think, about the guidance. Maybe I think the company is still waiting for, I think, the major project rollouts to take place. And that's where I think some amount of cautiousness as far as the outlook guidance is concerned. But as we interact with, I think, more and more companies on the ground, I think they are basically getting into the action mode, the execution mode as far as the projects are concerned. Be it in the infrastructure space or be it in the industry space, I think you're finding a good amount of execution of orders, I think, which are lined up for in the current year, the 17-18 financial year. So I may think that I think L&T probably may want to revise their guidance upwards, I think somewhere in the second half of the financial year. Maybe I think they want to play a little cautious at this point of time. That's what I can guess.
That is the case. And even, you know, the other leg of the laggards, that's IT. We saw that play out with TechM as well. Is there time at all to buy or nibble into IT names? Because the correction in IT as a sector has lasted for quite a while to come.
Anisha, well, I think the IT per se, I feel that I think 10-15% kind of a growth is something which I think one can talk about. Beyond that, I think the visibility of the growth in IT is not found. So if one is convinced about 10-15% kind of a growth, that too for selective companies, not across the sector, then in such situation, I think one could stay with some select companies. But definitely, I think as far as the sector outlook is concerned, quite circumspect. I don't think that I think we are seeing any more clarity at this point of time. In fact, I think in my own view, I feel that I think structurally some of the large IT companies will have to create some of the smaller units within themselves in order to cater to the young customers in form of startups that they are receiving. In such situation, they might probably see relatively better tractions going forward. So there may be some structural change happening into the business of some of the large size companies. So let's wait and see. But as of now, no much clarity available that one can go ahead and full-fledgedly buy them. Maybe the valuation wise the stocks have become attractive enough, but at the same time I think we are not seeing the growth that we want to see in this particular sector.
Okay, almost 9 o'clock, and if you've just tuned in, what are the headlines we are working with? Well, nothing big, scary or great has come from global markets. US markets were shut last night. Asian markets by and large are just middling along. China is up, but the rest of the Asia, you know, frankly is not going anywhere. When it comes to crude, we saw a big crack last week, and after that prices are looking settled. But somewhere if you're a shareholder of Tech Mahindra and Sun Pharma, I mean, there is reason to worry. The fall both in Tech Mahindra and Sun Pharma yesterday was scary. ADAG stocks yesterday have fallen, and they've fallen on not strong delivery based selling. That tells you that large part of the selling yesterday in ADA stocks was largely intraday. There you go, 21% volumes in RCOM, Reliance Capital 15.5, Reliance Infra only 16.8. Even in this market mayhem where every ADA stock is getting beaten down because of concerns, and some concerns are valid, is it time to be a buyer in a name like Reliance Capital, where the capital allocation has changed, the mutual fund business is picking up, and there is a value unlocking coming very soon in the housing business?
Well, I think there are plenty of other companies also, I think, where the valuation unlocking should happen going forward, in the particularly which are holding companies or the finance companies which are holding some of the investments, including mutual funds, including insurance businesses. Piece of Fairfax giving or exiting their stake from ICICI Lombard, valuing the company in just 1 year flat from 17,000 crore to 20,000 crore. So such kind of exit and such kind of valuation unlocking would definitely take place for many of the finance companies as we see it. Not too sure particularly about RCAP at this point of time. I think there may be many other issues which I am not fully aware about. But the fact remains that I think if the valuation unlocking stroke monetization takes place, I think it might end up going towards helping out some other group companies. That would be the given conclusion that we could drive at this point of time. So not very clear about, I think, whether one should buy into the RCAP at this point of time.
Right. Kunal, wanted to get your opinion as well on the ADAG group stocks, considering the correction in the mid and the small caps was led by this group alone yesterday. Do you sense that there could be some more selling in a Reliance Capital and some follow-through selling in Reliance Communications too?
You know, the chart structure for Reliance Infra and Reliance Capital, you know, both of these names out of the ADAG pack, I think were sort of, you know, improving quite well, you know, a couple of weeks back. Our Infra, Reliance Infra and our Capital, I think both of them They were trading at fresh swing highs. There was volume confirmation, indicator action. I think all of them went pretty well. But what you saw in the last 2 weeks or 3 weeks, when the stock corrected from those strong highs, confirmed by a lot of indicator actions, that dents the short-term sentiment. And this repeated chain that you see when the markets correct or when the mid caps correct, this pack is the one which probably sees that sharper sell-off. I think that should dent away sentiments from trading perspective. So technicals apart, but when you see stocks getting badgered like these from a trading angle, it becomes very difficult to take a strong and conviction based calls on the long side. So I would believe that these stocks, even though they are high beta in nature, extremely volatile in terms of trends, I think they would see some bit of sideways action. Traders would probably focus on some other pockets, and I would believe that there would be a lot of time before you see some base building in many of these names.
Right, 3 minutes to go, and then we'll get the first pre-open rates. And I don't think Jubilant FoodWorks will get any space to hide. Anyone's guess? I mean, my sense is 5 to 7%. That kind of an carnage is coming for Jubilant FoodWorks. We talk about consumption patterns, but when it comes to a company like Jubilant FoodWorks, or for that matter Westlife, which is the owner of McDonald's franchise in West and South, the sales numbers are radically different than what the core assumption is. They went 315 rupees for ITC. HDFC Bank yesterday closed at a record high. HDFC Limited also closed at a record high. Now these are not very cheap stocks. These are good companies, but if you're buying HDFC Bank at these levels, or for that matter ITC at these levels, what could be the potential trigger here?
Well, I think at the first, Nikunj, I think let us review the reason for which I think these stocks have found the sharp rally into the prices. Of course, the fundamentals are there, and definitely I think they have not changed significantly. They definitely held promises, and they continue to hold promises. But more importantly, what one has observed is that the amount of money allocation which has started happening into these stocks, the exit of money from some of the trouble names in pharma and ITs, and I think going money into the larger names in FMCG basket, I think is a understanding that we carried, and probably I think we are seeing the validation of that part of it. So certainly I think it's a money which is basically getting into some of the large cap FMCG companies, large cap banking companies. I think that is where the flow of funds are getting into. They are continuing to do well. The names which you mentioned, ITC, ITC, HDFC Bank, they continue to do well. In fact, I think their promise is to do better in coming environment. And that's where people are buying the safety as far as I think the allocation of their fund is concerned into the portfolio. Even though they are expensive, and they are expensive, but certainly I think for the want of funds to get invested, probably I think they are paying premium for some of the quality stocks. That is what I think one could derive it. Maybe at this point of time one could definitely argue that I think there is a requirement of quality papers into the market, so that the additional fund flow which keeps coming into the economy I think gets probably properly absorbed into some of the quality businesses. And that's where I think one could look forward to some of the insurance companies coming up for listing, some of the exchange coming up for the listing, depository coming up for the listing. I think these are some of the quality papers where one is expecting to park I think larger amount of funds into the businesses.
Well, just a few seconds and we should be hitting the pre-open rates for today. Let's just check in on what the SGX Nifty is up to. It very tempered a move is what it's indicating right now. The SGX Nifty at 95.85, a downtick of about 31 odd points or so. Remember, lack of global cues. Most of Asia is trading with a little bit of red spots. So you've got Japan, which is down about I think 100 odd points the last time I checked. Some key earnings as well today. M&M is going to be key amongst them, but the market opens with the tick around the 9600 mark for the Nifty. Let's check in on what the earnings reactions are. Let's start it off with L&T first, and let's see how the street has absorbed L&T's numbers. EPC business managed to meet estimates. The domestic business pickup is still pretty elusive, and L&T actually starts off well in the positive, up nearly about 4% for L&T. Just looking at the numbers, one would have thought this is not going to really be a market moving number or a stock moving number, but at least in the pre-open rates, it seems a little bit of a different picture. 4% higher for L&T, that's not bad. And also the stock saw a fair amount of build-up ahead of the numbers yesterday, and pretty volatile at that as well. Sun Pharma, though, continued to add shots, and yesterday as well it was down about 12%, so let's check in on that. The softness remains for Sun Pharma. Also, earnings reactions for an Aurobindo Pharma is going to be important. The numbers came in post-market hours yesterday. It's a 10% gap down start that you're seeing for Aurobindo Pharma. Let's check in on what BPCL as well is up to. First, the good numbers and a good show for BPCL. Starts off a little bit soft right now in trade. And then howler of a number from PFC as well as Coal India. Bad performance. So both these stocks should be reacting quite negatively. 10% down on PFC. Coal India is the other one which should come up here on your screens next. And Coal India as well, starkly lower, 3.5%. So these are all earnings reactions coming in. M&M, that's going to be the key one to look out for today. The numbers are slated to come out. So we're going to look out for that. You've also got Jet, REC, SAIL, United Spirits. These are all slated to report their numbers today. So these are going to be an active bunch.
Yeah, I mean, technically today is the last big day for earnings season, and by the end of the day we will pretty much get a sense on which way the earning meter has moved. And frankly, if you ask me, the earnings downgrade may have stopped, but the earnings upgrade cycle I think is still not there. You can talk about select few names, that's about it, but the aggregate picture is still not very powerful. I mean, if HUL volume sales were strong, Jubilant volume sales were poor. If BOB management commentary was decent, we never got that kind of a sense from other, PSU banks. If I mean, it's getting very, very stock specific and very, very differentiated. Maruti, nothing wrong with the numbers, but Tata Motors, big concern on JLR. So we are staring at a market where you cannot talk about a sector. One side you got Maruti, which is at a lifetime high. On the other side you got Tata Motors, which is at a multi-year low. We can talk about similar examples even in the consumer name, or for that matter even within the banking space. So Girish, if a client calls you after this interaction, and if his question is that, Girish, give me your best idea or ideas for for FY18, how would you like to start or end the conversation?
See, I can give you ideas from the coverage that we have currently. So we like, among the sectors, we like select autos, we like select financials, we like select cement. As you mentioned, it can't be a sector-wide call, it has to be a stock-specific call. So within that space, I would recommend in the auto space, we like Gabriel, which is a transmission and it's a company which caters to the two-wheeler and even the passenger vehicle sector. It manufactures shock absorbers and transmissions. So we think the stock is going to grow earnings at somewhere close to high teens with a PE multiple of somewhere close to 14-15 times FY19 with very good return ratios of 20% plus. So the growth and valuation kind of mix that we have makes Gabriel a good bet. On the cement side, as I said, we are selective. We don't like the entire space, but we like select companies in the south, for instance, which have got more exposure to the south. We like Dalmia Bharat, for instance. We think that volumes there could grow close to high single digit or maybe even low double digit territory, and it's delivering a fairly good EBITDA per ton, and the kind of valuation it's trading at, it's coming at less than $100 per metric ton from EV to metric ton perspective for FY19 based on my analyst estimate. So we think that stock could potentially see fairly a large upside. In consumer space, we like consumer discretionary like Inox. We like consumer durable consumer appliance player like Whirlpool. So these are the kind of stock specific ideas that I can potentially throw at you, which we think should do well over the next 12 to 18 months.
Well, RCOM continues to slide even in the pre-open rates, 2.5% lower for this one. And of course, the earnings reaction on a BHEL, on an Aurobindo Pharma, or for that matter, a whole host of other stocks as well. PFC, for instance, they're all starkly negative. BHEL down 6%, even though the numbers were not bad. PFC is down 10%, a gap down start coming in there. Jubilant Foodworks, of course, has started off sharply lower after that 7.5% degrowth in the same-store sales growth. Jubilant as well has started off with a deep gash down. But let's tell you what traders need to keep on their radar, and here's what's lined up for them. So let's start off with the ET Now Small Case Greed and Fear Index first, and what that is indicating today. Remember, yesterday it got a little bit closer to the fear zone, the needle, and that index will just come up for you on your screens next, still pretty much in the fear zone. So there you go. Fear zone, and quite starkly so actually. The needle has moved all the way to that 29 reading. So that's quite a sharp drop is what we've seen. And you know, it's amazing the kind of volatility that you're seeing in the greed and fear index of late, irrespective of the markets staying put at life highs. The greed and fear index on a daily basis is indicating just something new. The US Qs, they were shut, so not a whole lot to work with. Asian Qs, they're trading largely weak right now. It's the mid-caps meltdown which you need to focus on, and the way the broader markets have been underperforming vis-a-vis the benchmark indexes. So the small caps and the mid-caps have cracked over 2% on Monday, and now you're seeing month-to-date correction of nearly 5% for the mid-cap index. It was Arcom, Reliance Infra, which were the top losers on the index on a month-to-date basis. FIIs have created fresh longs in Nifty futures. The Nifty futures discount of 20 points has now vanished in single trading session. So heavy shorting in Sun Pharma, Tech Mahindra, DLF is what took place in trade yesterday. What about individual stocks? L&T should be reacting to its earnings. It's a unanimous call, a thumbs down from all three of our experts. Jubilant Foodworks, extremely bad numbers there, and unanimous thumbs down coming in from three of our techies. And PFC, wherein again the numbers were very bad, again a thumbs down from all three of our experts, CK, Siddharth as well as Kunal.
Devin, I'd like to draw your attention to what's happening in the mid-cap space, and if I look at mid-cap stocks, they've started correcting, Devin. Real estate is down, PSU banks are down. Anything in the mid-cap space which you always wanted to buy, and anything which is nearing your target entry price or target entry point?
Well, Nikunj, I think the definitely few stocks which we have kept an eye on, and I think the names are probably known to many, but I can share it. I think we like to add into the portfolio the likes of Sterlite Technology, where the fundamentals of the company remains, I think, very strong, and any correction is offering a larger degree of opportunity for investment. Similarly, some of the agri segment companies, there the opportunities are becoming right. I don't know whether you can classify UPL into that as a mid-cap space, but the fact remains that I think the stock remains fundamentally very strong from the investment perspective. Even Jain Irrigation with the paired date portfolio is looking, I think, increasingly interesting company from investment perspective as well. Some of the capital goods players, I think, which we find a good amount of possibility because they are into the middle of larger activity which is called the transmission and distribution business, which is picking up significantly within the power sector. The capital goods players like Schneider, GET&D, ABB Siemens, these are some of the companies which are even directionally, if you look at it, I think they look really positive from the investment point of view. Some of them may take time to produce the results in this particular space because the business itself is, I think, picking up with the projects rollout taking place. So, but I think definitely you find opportunities into the companies with the price correction happening into some of the mid-caps. So, wonderful opportunity, I must say, that this market is giving to add into some of the good quality stocks in the portfolio.
Okay, let's check in on what Sun Pharma as well is up to, considering the kind of addition of shorts that you saw on Sun Pharma yesterday. Let's check in on that name too. Sun Pharma continues to reel under pressure, although just a little bit soft, but 502 is where the stock is right now. And L&T, given the long build-up in the stock yesterday itself, let's check in on what L&T is up to. L&T in the pre-open rates is holding firm by nearly about 2%. But what are the key 5 stocks that you need to keep on your radar today? Ajay is here as always with the 5 stocks to watch. Ajay?
Good morning, Aisha. PFC clearly will be the one stock to